In this module, we're going to talk about the common mistakes that people typically make when it comes to filing their taxes. And most importantly, I'm going to tell you how you can avoid these common mistakes. That way you can avoid interest and penalties that the CRA will put on your taxes if you make these mistakes. And they can be very costly. It can cost you thousands of dollars in unwanted interest and penalties. So let's jump right in. The first common mistake I'm going to talk to you about is moving expenses. First, I'll show you how you can actually save money on taxes by claiming moving expenses. But before you get too excited, you have to understand that not all moving expenses are allowable deductions on your taxes. So it's important to understand that you can save money on taxes, but people usually get this one really wrong, and so they end up actually paying more on taxes. So let's talk through this. If you claim something that is not allowed by the CRA, the Canada Revenue Agency, you will end up paying more in taxes, more in interest, and more in penalties. So it's super important to understand what is allowed and what isn't allowed. First, you can only deduct moving expenses so long as you moved 40 kilometers closer for work or for school. So let's say you just happen to move from one apartment to another, or you moved back home after graduation, you cannot claim those moving expenses. And when it comes to the distance, it's the distance that is the shortest usual public route. That means it's not measured based on how far you have to drive from one point to another. Second, you can only claim moving expenses against your total earned income at the new location. So for example, let's say you are moving for school. That means you can claim your moving expenses against income from school, such as scholarship, bursaries, or part-time income. Now let's say you moved to be closer to work. That means you can deduct income against your employment income. However, you cannot deduct expenses against other forms of income, such as rental income, such as investment income, or capital gains. Third, you can only claim expenses so long as they are reasonable and necessary. And this is where the CRA uses a lot of judgment to make sure that you are not claiming everything under the sun. It has to be considered necessary and reasonable. So for example, you can claim things like the cost of transportation, storage, travel, temporary living, and legal fees. You can also deduct the cost of selling your old home, such as advertising, commissions, and legal fees. And you can also deduct the cost of maintaining your old home if you cannot sell it, such as mortgage interest, property taxes, insurance, and utilities. However, you cannot claim more than $5,000 when it comes to these particular expenses. There are also moving expenses that are not eligible for deduction, even if they seem reasonable and necessary. So let's talk about some of those things. For example, money spent fixing up your old home before you put it up for sale, not allowed. Costs incurred in the sale of your old home if you delayed it for investment purposes or until the real estate market improved. Again, also not allowed. If you're claiming expenses that are reimbursed by your employer and not including your income, also not allowed. And any expenses that you don't have the required documentation to support those claims, also not allowed. So once you have all that figured out, how do you actually go on about claiming those moving expenses? Well, first, you have to fill out Form T1M for moving expenses and report the amount on line 21900, which is for moving expenses on your personal T1 general tax return. Now make sure, this is very important, you keep all your receipts and supporting documentations for anything you're going to claim as moving expenses in case the CRA is looking for them. You can find out more information when it comes to moving expenses on the CRA website. Make sure you really understand what is allowed, what isn't, what is reasonable, so you can claim the right amount of moving expenses and avoid hefty penalties and interest or overpaying taxes. The next common mistake we're going to talk about is around tuition expenses. Now, as you may know, tuition fees and other educational expenses can be claimed as a tax deduction, but only if they meet certain criteria. And I've talked about this in detail in some of my other videos, but in this one, I'm going to focus on the mistake side of things. If you claim tuition fees that are ineligible, you will end up paying more taxes and face potential penalties and interest by the CRA. So let's go over the key points on how you can avoid claiming ineligible tuition fees. And you want to claim the eligible ones to maximize your tax refund. So first, let's talk about what is considered to be an eligible tuition fee. Not all tuition fees are eligible for the tax credit. You need a slip called the T2200 from a designated educational institution that has your total eligible tuition fees paid as well as the number of months you were enrolled either as a full-time or part-time student. And a designated educational institution is usually a Canadian university, college, or other post-secondary school, or a foreign university that offers a degree at a bachelor level or higher. Now, there is an option that if you don't fall into this first category we talked about, that you can still claim those tuition fees. Now, if you take some courses that improve your skills in an occupation, that may also qualify, but they have to be certified, and here's the important bit, it has to be certified by the Employment and Social Development Canada Agency, and you can find a list of eligible institutions that fall in this category on the CRA website. Another very common mix-up that students face when claiming tuition fees on their taxes is whether they're a full-time student or a part-time student, and it's very important to understand the difference between the two. To be considered a full-time student, you have to take at least 60% of the usual course load for your program, or it has to be regarded as such by your educational institution. To be considered a part-time student, you have to take less than 60% of the usual course load, or only a few subjects or evening classes or certain courses by that correspondence. So make sure you contact your student education center if you're not sure what this means or how to access your T2200, which is all this information. Now, outside of tuition fees, there's another type of expense that you can claim to get the tuition tax credit, and that is called the examination fees. These are fees that you pay to take an exam that is required to obtain a professional status, or to be licensed or certified as a tradesperson, or to practice a profession or trade in Canada. The exam, in order to qualify for the examination fees, has to be offered by an educational institution, a professional association, a provincial ministry, or a similar institution. And again, you need a receipt or some other documentation to prove the amount and the purpose of the exam. In a previous video, I explained what medical expenses are and how you can claim them on your taxes to maximize your tax refund. In this segment, I'm going to focus on the common pitfalls when it comes to claiming medical expenses and how you can avoid those common pitfalls. So one, you can avoid expensive interest and penalties by the CRA by claiming ineligible medical expenses. And two, how you can maximize your tax refund by claiming the right types of medical expenses. First of all, you need to understand what is considered to be an eligible medical expense and what isn't. Now, some medical expenses may seem obvious: prescription drugs, dental care, eye exams. Those are the ones we generally think of when it comes to claiming medical expenses. But did you know that there are other expenses that, if they're used to improve the quality of life or someone with a medical condition, they also qualify as eligible medical expenses for a tax credit? However, these types of expenses may require a doctor's prescription or certificate to prove that they are necessary. Now, this is a common theme when it comes to claiming any type of expenses on your tax return. It has to be reasonable and necessary. For example, things that you can claim are birth control pills prescribed by a doctor, renovation or construction costs to make your home more accessible or comfortable for someone with a disability or impairment, or cosmetic and plastic surgery that is done for medical or reconstructive reasons such as artificial teeth or nose surgery after an accident or an illness. You can also claim things like gluten-free products for someone with celiac disease, or tutoring for children with learning disabilities, or prescription sunglasses. On the other hand, there are certain medical expenses that you may think that are eligible for this tax credit because they improve the quality of life or they are related to a health or fitness regime. However, they are not eligible for the tax credit. So let's talk through some of those options. So things like fees for fitness clubs, gyms, or spas, not eligible. Non-prescription birth control devices, not eligible. Blood pressure monitors, thermometers, or scales, also not eligible. Cosmetic surgery that is done only to enhance your appearance, such as liposuction, hair replacement, filler injections, or teeth whitening. Again, these are examples of what is not eligible. So how do you prove that you have paid for these eligible medical expenses? Well, it's an easy guess. You need the right receipts and the right documentation. Now, make sure if you are going to claim medical expenses that you keep documents as evidence for your expenses and income. Now, examples include receipts that show who you paid, what you paid for, and when you paid, and who received the service or product. Proof of payment such as the bank statement, a credit card statement, or canceled checks if you still have those. Other items can help your eligibility criteria to prove that it is a reasonable expense can be proof of support, such as a lease agreement, grocery receipts, or if you're claiming expenses for a dependent that are 18 years or older. Now, when it comes to filing a tax, you don't actually send all the supporting documentations to the CRA directly because 99% of you should be filing your taxes electronically, and the only thing the CRA sees is what you are claiming. Only if the CRA is asking for backup, that's when you actually need to provide your support. So that's why I always recommend before you claim anything, make sure you have the document and backup up front. So in the event the CRA is asking for them, you have that documentation ready and on standby. In this segment, I'm going to talk to you about why it's so important being organized and keeping your documents and receipts when it comes to tax filing, so you can avoid some common tax mistakes when it comes to filing your taxes. Now, you might be thinking that because taxes are done electronically, there is no sense in being organized or even keeping documents because everything is submitted electronically. But I'm going to tell you why that isn't the case, and why being organized and keeping those receipts is super important. So trust me, watch this segment. Now, for example, as a student, you may be eligible for various tax deductions and tax credits. That can help you lower your tax bill or even get you a large tax refund, which is very important considering as a student, you don't have a lot of money going around. But in order to claim these benefits, you need to have proof of your expenses, and that's where those receipts come in super handy. What are receipts? You may have heard the term, but maybe don't know what it is. Receipts are documents that show how much you paid for something, when you paid for something, and who you paid it to. Now, they can also be paper or electronic, but they need to be official and valid. The CRA, the Canada Revenue Agency, may ask you to provide those receipts to verify your claims. And if you don't have them, you may lose your deduction, you may lose those tax credits, and on top of that, you may face penalties or interest. So it's a double whammy. You lose the deduction, you lose the tax credit, plus you have to pay interest and penalties on top. So keep those documents and receipts. So let's talk about my next point. What kind of receipts do you even need to keep? Because you don't want to keep everything lying around in a shoebox. What are some of the important receipts that you need to actually keep? Well, it really depends on what type of expenses you have, but let's talk about some of the most common ones that will apply to your situation. For example, tuition fees. You can claim a tax credit for the amount of tuition fees you paid to an eligible education institution, as long as you have a form called a T2200 or a T11 form from the institution. Student loan interest is another big one. You can claim a tax credit for the interest you paid on student loans, as long as they are from the federal or provincial government or a designated financial institution. Moving expenses. You can deduct moving expenses if you moved at least 40 kilometers. We talked about this in the last segment. For full-time, for work after graduation, and if you have receipts for things like transportation, accommodation, you can claim those costs. Childcare expenses is another common type of expense. If you have a child under the age of 16 or a child with a disability, you can deduct the amount you paid for childcare services such as daycare, babysitting, boarding school. As long as you have the receipts of the name, the address, the social insurance number of the provider, you can claim that on your taxes. Medical expenses, we just talked about this one as well. You can claim a tax credit for eligible medical expenses that you paid for yourself, for your spouse, or your dependents, as long as you have the receipts for the prescriptions for the dental care, vision care, or other services. Now, these are just some of the examples I wanted to highlight because they're some of the more common ones. There may be additional expenses that you are claiming on your taxes, but the point is, if you are claiming something on your taxes, you should have documentation and backup that support that claim. Now that you know what you need to keep for your receipts, let me give you some tips on how to keep them organized to make tax filing that much easier. Use a folder or a binder to store your receipts by categories such as tuition, student loan, moving, childcare, and medical, and label each section clearly and sort your receipts by date. Or you can use my method, and this is my preferred one. You can use a spreadsheet or an app to track your receipts and calculate your total expenses for each category. You can also take pictures, scan your photos of those receipts, and store them digitally, but make sure you keep the original copies as well. You can also use tax software or a tax preparer to help you file your taxes online or by mail if you want to do that option. But again, I recommend if you are going to file taxes, do it online. You don't need to send your receipts to that CRA when you're filing electronically, but you need to keep them for at least 6 years in case the CRA is going to ask for them. By following these tips, you can save time, you can save money, and you can prevent the stress when it comes to tax season. And please remember, keeping your receipts and being organized is not only good for your finances, but also for your peace of mind. In this segment, I'm going to talk to you about on how to fix mistakes on your tax return after you have filed. If you've ever made a mistake on your tax return, because again, we're human, humans make mistakes, and you might be feeling stressed or worried that you have filed something incorrectly, in this segment, I'm going to show you how you can fix those mistakes so you don't have to worry about it and let it ruin your day. A lot of people mistakenly believe that once you file your taxes, it is too late to make any changes, and that is incorrect. You can make changes to your tax return after you have filed. And honestly, making changes to your tax return after you have filed is no big deal, and it's actually a lot simpler and easier than you actually think. And let me be super clear and reassure you that if you have made a mistake on your tax return, it is not a big deal, and it's actually more common than you may think, and it's not a huge issue. You can change your tax return. It's relatively easy. Things like missing receipts, overlooking a deduction, the late arrival of a tax slip, or entering a number incorrectly can all be fixed. So don't hit that panic button just yet. You can change your tax return with relative ease, and I'm going to show you and explain how you can do that. In fact, you can go back as far back as 10 years and adjust those tax documents, but you can only do that if you have the tax receipts, tax slips, and other documentations that you need in order to file taxes. And that's why once you have those documents handy, again, it's a little bit hard the further back you go, but if you have those documents, then it's never too late to change your tax return if you've made a mistake. As a general rule, if you have made a mistake on your tax return and you realize this, don't file another return for that year. Instead, make sure you wait until you receive your notice of assessment from the Canada Revenue Agencies. Your NOA, Notice of Assessment, will show you how the CRA has processed your return and if there are any adjustments or concerns or corrections they have made. Once you have reviewed your NOA, there are 3 ways to make changes to your tax return. First is refile. Using refile is one of the fastest, easiest, and most cost-effective ways to make changes to your previously filed tax return. Simply submit your adjustments using the same certified net file software used when you initially filed your tax return. The second option is through the CRA My Account sign-in. So you can log into your CRA account and click where it says Change My Return. After selecting the tax year and the line that needs to be changed, you can then input the correct information to submit your changes. Now, once you submit an adjustment request online, you can't submit another one until the first one has been finalized. You are allowed to make multiple adjustments all in one request, so have your information ready and on standby the first go around. But there are some restrictions if you are going to use the MyCRA account to make those changes. You can only use the MyCRA account to submit certain types of changes to your tax return. Now, for more details on what you can and can't do, I would recommend visiting the conditions and the exclusions for using the Change My Return from the CRA website. Last but not least, you can always mail. You can use the mail system to change your tax return. You have to complete something called a T1 adjustment request and send along all your supporting documents for the change to your local tax center. When it comes to those 3 options we just talked about, I would recommend you use option number 1 or number 2. It is the fastest and easiest way to make changes. Mailing, whether you're going to file for the first time or you're going to refile through mail, it just takes a lot longer and it's just a more burdensome process because it's very manual. Once your review is complete, you'll receive one of the following from the CRA. Either you'll receive a notice of reassessment that shows the changes to your return, or you'll receive a letter explaining why the changes you requested were not applied. And if you don't hear from the CRA right away, don't worry about it. Don't lose any sleep over it. Tax season is a very busy season, and the CRA wants to process your changes right away because it is also a priority to them, even if you may not feel like it. Believe it or not, the CRA also wants those tax returns sorted out just as much as you do. If you have any questions on these tax-related topics that I've covered in these series of videos or on personal finance, make sure to check out my YouTube channel for even more personal finance and tax-related content. Hope to see you there. Thank you.